Finance Pulse, where we bring you the stories shaping markets, money, and the global economy. From soaring luxury stocks to fiscal challenges in London and energy innovation in Baghdad. Tonight's headlines are a mix of opportunity, risk, and bold moves in business. Let's dive into our top stories of the day. First, LVMH is back in the spotlight, sending shares up 13% after reporting growth for the first time this year. The French luxury conglomerate, home to brands like Louis Vuitton, Dior and Loewe, saw a modest 1% organic growth in the third quarter, marking a rebound after 2 consecutive quarters of decline. Analysts say the performance underscores LVMH's dominance in the global luxury market and its ability to weather economic slowdowns while continuing to set the pace for high-end fashion and lifestyle brands. Next, the UK braces for tough financial decisions. Chancellor Rachel Reeves has hinted that the upcoming budget may include both tax increases and spending cuts. This comes as the government seeks to close a fiscal gap that could reach £50 billion, forcing difficult choices that could challenge previous promises to workers. Investors, lawmakers, and citizens alike are watching closely, as these measures could reshape the economic landscape and influence markets, consumer sentiment, and political dynamics alike. And in the Middle East, Iraq is taking steps to end its $4 billion annual gas imports from Iran by 2028. The country is tapping into gas that's currently flared during oil production, capturing a resource worth billions and redirecting it to meet domestic energy needs. This move not only aims to reduce dependency on imports, but also promises to alleviate chronic power shortages, showcasing Iraq's push toward energy diversification and more efficient use of its natural resources. Now, for tonight's deep dive, we turn to the luxury fashion sector and a record-setting EU fine. Gucci, Chloé and Loewe have collectively been hit with more than €157 million in penalties for restricting how retailers could price their products both online and in stores. The European Commission's investigation revealed that these brands imposed maximum pricing rules, controlled discounts, and limited sales periods, effectively reducing competition and consumer choice. Gucci faced the largest penalty at nearly €120 million, Chloé €19.7 million, and Loewe €18 million. The fines were slightly reduced after the brands acknowledged the violations and cooperated with regulators. In response, the companies emphasized that they have strengthened compliance measures and are committed to adhering strictly to competition law moving forward. The EU's decision sends a strong message to the global fashion industry. Regulatory oversight is intensifying, and practices that interfere with independent retailers' strategies will not be tolerated. This development comes as luxury brands also face additional scrutiny over label practices and data protection issues, highlighting the increasingly complex regulatory landscape in which these companies operate. From stock search and market strategy to government budgets and regulatory crackdowns, today's stories reflect the interconnected nature of global finance. Whether it's a luxury powerhouse recovering lost ground, a government navigating fiscal pressures, or nations rethinking energy and trade, the world of finance remains as dynamic and unpredictable as ever. That's all in Finance Pulse for today. Follow the Finance 360 for more updates.